All right, all right. Good afternoon, good afternoon. How is everybody doing out there on this lovely Thursday afternoon? All right. So welcome back to Tips from Elaine's Desk. Elaine Proby here, CEO of PROBY'S Tax and Accounting and Tips from Elaine's Desk. All right. So guys, today I really love this topic today because it's talking about why you would owe taxes with multiple sources of income. This is very interesting. A lot of folks have this problem. Every year, I'm spending a lot of time explaining why someone would owe more taxes than they did the year before. And a lot of it has to do with them getting different income from different places. So we're going to talk about that, why it happens, and we'll talk about some solutions, some ways that you can keep this from happening. All right. So guys, once again, why you would owe taxes on multiple sources of income is our topic today. Hit like and share on this video, right? And you guys make some notes, okay? So let everybody get this information. Hi, Joan. Good afternoon. Good afternoon. How are you? So let's jump right into this topic today, guys. The first one is, what is multiple source of income? So we want to talk about what those incomes are and what's multiple source of income. And it just means that you have income coming from different sources, right? So you can have a job. So you have W-2 income coming in. Some of us may be getting a pension. That is taxable income as well. Some of us get Social Security. That is income as well. Sometimes it's taxable, sometimes it's not, depending on how much other income you do have, right? So then you also have, if you have rental property and it is a positive cash flow, you will have income from that as well, right? And some people may be working, they may be laid off during the year, they get some unemployment. And so that is also taxable. So when all this stuff gets together, the unemployment income, your pension income, Social Security, the job, all this stuff, then if you have investment, let's say in a partnership in a business with somebody else, you get a K-1 showing that you have income from that investment as well. This is multiple sources of income, guys. You have to be fully aware of all the sources of income you have. And one of the reasons why people will owe taxes because of the multiple sources of income. And I'll tell you why you're going to owe taxes in my next point. Okay, so, hey, Laverne, thanks for jumping in here. All right. Hit like and share this video. Rod Smith, hey, bro, how are you? Sharon Ellis, hi, Elaine Smith Proby. How are you doing, Sharon? Thanks for jumping in, you guys. Anya, hey, Mom T, I love it, I love it, I love it. Hit like and share this video, guys. We're talking about why you would owe taxes with multiple sources of income. Very important information. So the first point is, what are those multiple sources of income? And some people don't think that they're taxable if you get pension. Some people don't think if you get Social Security it's taxable. And so some people don't think you pay taxes on unemployment. But all of these are taxable income, guys. And when it all gets together, this is why you're going to owe taxes. So let's get to our second point. Hit like and share on this video. Norman Strong, thanks for jumping in here. So when all the different sources of income gets added together in your tax return, this is what happens. On your taxes, there's a line item for all these sources of income. Your W-2 income is on one line item. If you're operating an independent business, profit from that business is on a separate line item. Your Social Security income is on a separate line item. All this income lines up on your tax return and it gets added up. Now, when all the income gets added up, guys, it puts you in a different tax bracket. So this is how you're going to owe. And even if you only have one or two, even if you have only two of these things, right? A W-2 job and Social Security. A W-2 job and some unemployment, a W-2 job and some pension, right? Self-employment income and something else. It doesn't matter. It adds up. And when it gets together, it puts you in a different tax bracket. Now, a lot of people is wondering, why do I owe taxes when you're used to paying a certain amount of taxes on a certain amount of income? You start adding income to it, it takes you to a whole nother place. Now, let me point out, for those of you who are self-employed, this is very, very important. You have to pay your own Social Security taxes on the profit of your personal business. If you have a job, the job takes out Social Security taxes out of your check. The employer adds to it. They send that off to the government. When you work for yourself, you have to pay all of your Social Security taxes and Medicare yourself on your profits, right? So this can be up to 15%. You have to pay this out of your profit. So if you are not prepared and not aware of having to pay the Social Security taxes, including along with income taxes on that money as well. So this is why you would owe taxes. See, because you have to understand that you're not only paying income taxes, you're paying Social Security taxes if you are self-employed. So this is one of the points I really want to make this clear, because a lot of people don't really understand this. And when you come to do your taxes and you wind up owing money at the end of the year that you are totally not expecting, this is usually a blow to a whole lot of folks. So this topic today, again, very important, guys. Hit like and share on this video. Hey, Geronimo, thanks for jumping in here. He said awesomeness. Cognac Barcelona, thanks for jumping in. Lorna Smith, I love the hearts. Okay. So the Social Security taxes you must pay, depending on your gross income, guys. This is another real problem. Depending on how much money you make, when all this income get added together, and it might not look like much, 10,000 here, 15,000 there, 25, 35, whatever. Depending on how much income this is, you could lose credits. For example, let's say you were used to getting earned income credit. Let's use earned income credit for a good example, because most people get this, right? If you're used to getting earned income credit, let's say you earn $27,000 to $26,000. Now all of a sudden you had a part-time job and you made an additional $15,000, right? So when the $26,000 added to this $15,000, it puts you over the earned income credit threshold, you get no earned income credit. So a lot of folks don't understand this. They're like, well, I got earned income credit last year. There was $3,000 or $4,000 for my kids. What happened now? You made more money. Multiple sources of income. When you're thinking about just that $25,000 on a regular job, you didn't think about the additional $10,000 or $15,000 on the second job. When it gets added together, it puts you above the threshold. The earned income credit goes away. There's a possibility that you could owe taxes. That is one that I really want to point out. A lot of people get caught up with that. They really don't understand. Another credit that you can lose based on your income is education credit. You get education credit, guys, but if you make a certain amount of money, you won't get that credit anymore. There's a lot of credit you won't get. And then, of course, if you have rental property, you get to write off a loss on rental property. But when your income reaches a certain threshold, you no longer get to write that loss off. It says zero. It carries forward to another year. So now you don't have that loss to offset your income. And what happened? You wind up owing taxes. So this is so important. There's a lot of different reasons why you will owe taxes based on multiple sources of income. Okay, so I will explain to you what some of those solutions are in the third point. So hit like and share on this video. Hi, Malcolm. Thanks for jumping in here. Greetings to you too. So hit like and share on this video, guys. Let me give you some solution to this problem. Again, it's very common. I'm sure some of you out there have encountered this. From one year to the next, things changes. Your refund no longer is there. You owe taxes, and sometimes you owe a lot more taxes. Okay, so let's jump into the third point. The third point is the solution. What do you need to do about this? So first thing you need to do, guys, if you have this problem, multiple sources of income, you want to make sure that your W-4, the W-4 is the form that you fill out with your withholding, right? What's your filing status, how many dependents. This W-4 form goes to the employer so they know how much taxes to deduct from you. So now you have got to stay on top of this. If you are working at several places and you have money coming in elsewhere, you need to make sure that if you have to adjust that W-4 withholding, go ahead and do that as soon as you can, top of the year, or as soon as you can within the year if necessary, so that the right amount of taxes are taken out. Now, here's another situation. So let's say you have two jobs, right? One job is paying you $30,000. You fill out your W-4. You said, I'm single with two dependents or whatever that is. The tax table is designed to deduct taxes based on your filing status and your dependents and how much money you make. So if that's $30,000, the table was taken out for that $30,000. Now, if you have a second job, this is the multiple source of income. That second job, you're making, say, $25,000 in the second job. So the tax table is going to deduct income taxes based on that $25,000. So each job thinks that's the only money you're making. So The percentages that's deducted is just for the amount of dollars based on that job, right? So I hope you guys are following this. Now, at the end of the year, when this gets added together, and now you have made, say, $55,000 or $60,000. So the 10% that was taken out of one job and the other 10% of the other job, when this gets together now and it puts you into even a 15% tax bracket, it is more than what was withheld. So chances are you're going to owe taxes. So you really have to stay on top of this. And I know a lot of this sounds, like a whole lot. So this is where you get assistance with this process. I get clients call all the time. I'm on a new job. I'm making this much money. How much should I put on the W-4? You want to stay on top of this, but 2 jobs with 2 different amount of money can put you into a tax situation if you are not taking out the right amount of withholding. All right. So hi, Risha Utah Smith. Thanks for jumping in here. Good afternoon. Good afternoon. Great information. Thank you. Now let's get into self-employment. If you're working for yourself, guys, and no one is taking out any taxes out of the money you make, you must make estimated taxes. You have to determine how much money you're making. You need to figure out how much you're going to owe based on your last year's situation, and you want to make quarterly estimated taxes. So if you're going to owe, let's say, $10,000 at the end of the year, every 3 months, you want to send in $2,500 to the government for estimated taxes. 1, you don't have to pay all at the end. And 2, more than anything else, it won't cost you additional penalty for not paying enough taxes, right? Because when you pay it all at the end, it's too late. You have already incurred penalties. Okay, so if you work for yourself, no one is taking out your taxes. You need to figure out how much money you're going to make or estimate or project, and then make some estimated tax payment. All right. Now, the other part of this is, let's say you're getting Social Security income. Now you have a W-2 job because you're still working part-time. You're getting Social Security as well. Social Security will ask you if you want withholding. Now, most people don't have any taxes taken out of Social Security. Why? Because they say, I don't have to pay taxes on Social Security. Well, you may not have to pay any taxes if that's all you get. If all you get is Social Security income, no, you don't have to pay any taxes. We're talking about multiple sources of income. So if Social Security is one of those sources of income, a job or something else is another source of income. Now you have multiple sources of income. Now your Social Security, all or some of it becomes taxable, right? What happens? You never had any taxes taken out of that Social Security. When it gets added to the other income, some of it is taxable. You wind up owing taxes because there was not enough taxes there to cover the Social Security income. All right. So what you want to do, solution to that, have taxes taken out of your Social Security if you have other income and you're only paying taxes on the other income. So you can change the paperwork. You can have them take taxes out of your Social Security. So at the end of the year, you're not surprised. All right. So let's see. Geronimo have made a statement. I think I need to put these on. It's been a minute since I had to put these lovely glasses in. To grow business and Belizean businesses, we must circulate what? We must circulate this 10 times, right? More with Belizean businesses. Let's build some Belizean billionaires. That's right. And you know what? The whole idea is, Geronimo, is coming together, get information. You cannot do what you don't know. And that's my whole point. That's why I'm giving up all this information. It's just free info. If you don't know what to do, you can't do it. So how can you grow and build your business if you don't know some of the things to do to make that happen? So good point. Hi, Dr. Tez. Thanks for jumping in here. Good afternoon. Good afternoon. So the other point I wanted to make here, guys, pension. This is it. If you have pension income coming in. First of all, let's say you withdraw money from your pension, something comes up, you need to pull some money out of your pension fund. What a lot of people don't understand is that if you pull money out of your pension early, before, say, age 59 and a half, you want to pull $20,000 out. What I notice is a lot of times when you fill those forms out, they will ask you about withholding. Most people don't have withholding taken out, but there is a 10% early withdrawal penalty along with the income taxes on that pension. So most people don't know this. They take out the 10% out of the $20,000 they withdraw. Let's say they pulled up, they withheld $2,000. When they come to do their taxes, and I said, well, you owe taxes because of this pension. They say, well, they took taxes out. They took the 10% for the penalty, but they never took anything out for income taxes, right? So if you pull money out of your pension again, get some advice is what you need to put on there as far as withholding taxes, because not only is the 10% penalty going to apply if you're underage, you will have to pay income taxes on that money as well. Now, let's get to regular pension distribution. This is the other part to let people say, I don't have to pay money on my pension. Now, this is all I'm getting is my pension distribution. The last thing I want to say about this is when that money was set aside for your retirement, it was never taxed. It was set aside tax-free. Now that you're pulling it out, you've got to pay taxes on it. So when you start withdrawing from your pension, guys, make sure you fill out one of those withholding certificate. Make sure they are taking money out of your pension. Same way as when you was working. Make sure that money is taken out, so you're not winding up with this pension and no taxes taken out and then have a situation at the end. So I'm not going to add any more to this pot. I think that's a lot of information right there, you guys. Pay attention to this stuff. So let me just go back and recap this. Lerner says, calling all Belizean businesses to show up for the next business mixer. Yeah, show up for the next business mixer. Okay, I have a lot of people that's really doing it, right? So, hey, why not us, right? So let me recap this real quick. Why you would owe taxes with multiple sources of income. The first point is, what is multiple sources of income? And it includes monies from a job, monies from an investment. You get a K-1 because you're a partner in another business. Pension money is taxable. Social Security becomes taxable when you have other sources of income. Rental property, if you have a positive cash flow, you're making more money on the rents that you're doing when you pay out, that is taxable. Unemployment. Sometimes we're working, sometimes we're laid off. We get unemployment while we work, while we have other incomes because we're self-employed. This is considered multiple sources of income. And this is what we want to talk about. So don't ignore any of this stuff, guys. So whatever, if you're doing any or all of this, make sure you stay on top of what your income is. Second point, why you would owe taxes? Well, when all of this income gets added together, it puts you in another tax bracket. When you're self-employed, you're paying your own Social Security and your Medicare on the profits over $400, right? So all this stuff adds up together, put you there. So you have to pay more taxes. You lose credits. You know how it is. All these credits is based on how much money you make. You make too much, this credit goes away. No more earned income credit, no education credit. So depending on how much you make, if you make too much, you lose credits, you owe taxes, right? So this is super important. And the third point is the solution. What do you do about this? Check your W-4s withholding at the end of the year. If you know you have more than one job, you need to make some adjustment there. If you're self-employed, you need to make estimated payments there. If you're getting Social Security, they could withhold taxes. If you're getting a pension withdrawal, make sure the right amount of taxes is taken out. And this all means you just got to sit down, evaluate your situation, see what's good for you, get some professional advice if you can't figure this out yourself. Hey, Sylvia, thanks for jumping in here. All right. She said, when is the next one? We're going to talk about that. Next business mixture. It's coming up on March the 7th. So we'll talk about that real quick, Sylvia. So those are the 3 points. Very, very, very super important information, guys. Pay attention. If you have any further questions or concern about this, you can reach me at PROBY'S.com. There's a calendar there. You can go in there and book yourself a free 15-minute consultation and get some of these questions answered. If not, you could call the office at 323-290-9034, and I'll be glad to talk to you. Of course, it's tax season. Make sure that you get your taxes done. Call PROBY'S. You can get to upload all your documents. Doesn't matter where you are. It doesn't matter what state you are. And you don't even have to leave the comfort of your home. You can upload all your documents and get everything handled. And of course, everything is automatic, e-pay, e-file, electronic filing and payment and all that good stuff, money deposit into your bank account, all that. So we can take care of it, of you. So don't delay, all right? And if you're not going to get it done on time, get an extension. Make sure you don't pay late filing penalties if you're going to owe, right? So we're trying to keep the money that we make. That's right. So that brings me to Elaine's desk.com. We're talking about the workshop, which is on March the 7th. So this workshop, guys, stay tuned. Go to the desk and get information so you can sign up for it. This is going to be super important. Lots of great information. Look, you guys, take heed, make use of this information. Everyone that does, you know, they can become more and more successful if you just follow instructions. Again, you cannot do what you don't know. This is what I was telling Geronimo, right? So I think that covers it all, you guys. Stay tuned every Tuesday and Thursday. Cognac says, thank you, thank you, thank you. Needed this information. Thank you, babe. All right. So this is it, guys. Every Tuesday and Thursday, make sure that you tune in here. Come back over this video, share this video, let everybody get this information, learn this great information. Thank you so much for tuning in. And again, here we are, almost at the end of another week. This is, I don't know what's going on with these weeks. I know February is a short month because this is my month, my birthday month. Here we are, Thursday. So with that said, I want you guys to have a fabulous weekend. And with that said, you guys take care of each other and take care of yourself. Thanks for watching. Bye-bye.